All right, let's get right into it. Alphabet just dropped its Q3 2025 earnings, and the numbers are, well, they're huge. So today we're going to cut through all the noise and get straight to the heart of it, breaking down the key figures and insights directly from Alphabet CFO Anat Ashkenazi.
So, right from the get-go, you can feel the confidence. The CFO didn't mince words. She kicked things off by saying this wasn't just a good quarter, it was an outstanding one. So what does outstanding actually look like in numbers?
Wow. Okay, here is the number that just says it all. For the very first time in its history, Alphabet's quarterly revenue crossed the $100 billion mark. It came in at a staggering $102.3 billion. I mean, this isn't just growth, right? This is a massive milestone.
So let's unpack that headline performance. Beyond that giant revenue number, what other key metrics really define this record-breaking quarter? Let's dig in.
Okay, now this is where things get really interesting because it's all about profitability. You see total revenue, up a very strong 16% year over year. But then you look at net income, the actual profit, and that shot up 33%. So what does that tell us? They're not just getting bigger, they're getting way more efficient at turning those sales into actual cash.
And here's the proof right here. Their operating margin hit 30.5%. Just think about that for a second. For every single dollar that came in the door, after paying for everything it takes to run the business, they kept over 30 cents as profit. That is just an incredibly efficient machine. And all that efficiency? Well, it turns into this, free cash flow. We're talking $24.5 billion in cash in just 3 months. That's the money they have left over to do whatever they want with. Invest, buy back stock, you name it. It's just a crazy display of financial firepower. All right, so we've got the big picture. But where did all that money, that $102 billion, actually come from? Let's break down the engines of growth.
This table lays it all out perfectly. You've got Google services, that's the big one, right? Search, YouTube, all that stuff, bringing in a massive $87 billion. But the real story is in that growth column. Services grew at a very healthy 14%. But look at Google Cloud. It's just on fire, growing at 34%. That's more than double the rate.
And if we peek inside that big services bucket, it's strong pretty much everywhere you look. The CFO pointed out that core search and YouTube ads were both up a solid 15%. And then the subscriptions part of the business, stuff like Google One, YouTube Premium, that grew even faster at 21%.
But look, as good as all that is, the real story this quarter, the thing everyone is watching, was the incredible acceleration of Google Cloud.
Yeah, let's just let that number sink in for a second. 34% year over year. That's not just good, that's explosive growth. It's a clear signal that the demand for their AI and cloud stuff is just shifting into a whole other gear.
And here's the kicker. It's not just growing fast, it's getting way more profitable. Look at this. The operating margin for cloud jumped from about 17% last year all the way up to nearly 24% this quarter. So the takeaway here is huge. The bigger cloud gets, the more profitable it becomes, and at an even faster rate.
So is this growth going to continue? Well, check this out. $155 billion. That's the cloud backlog. Basically, it's all the deals they've already signed but haven't billed for yet. It's a gigantic vote of confidence from customers for the long haul, especially when it comes to enterprise AI. And if that last number wasn't enough, get this. The CFO dropped this little factoid. In just the first 9 months of this year, Cloud has signed more billion-dollar deals than in the last 2 years combined. Think about that. They're landing absolute whales at a speed we've just never seen before from them. Okay, but growth like this, it doesn't just happen, right? It's not free. To keep up with this insane demand, especially for AI, you have to invest a lot. So let's talk about the price of all this progress.
And that brings us to CapEx, or capital expenditures. You hear this term all the time. It's simply the money they're spending on the real, physical stuff. We're talking servers, data centers, all the hardware that makes their entire empire run.
And the amount they're spending is just jaw-dropping. $24 billion. That's not for a year. That's for 1 quarter. Just 90 days. That's what it costs to build out the infrastructure to keep this rocket ship fueled. So where's all that cash going? The CFO laid it out pretty simply. The lion's share, about 60%, is going straight into servers. The actual computers doing the heavy lifting. The other 40% is for the buildings themselves, the data centers, and all the networking gear to connect everything up.
Okay, last section. What does this all mean for the future? Let's look at the outlook the CFO gave and see how today's numbers connect to tomorrow's plans.
Well, spoiler alert, the spending is not slowing down. It's speeding up. They actually raised their spending forecast for this year from $85 billion up to between $91 and $93 billion. And then, even more telling, she said to expect another significant jump in 2026. The foot is firmly on the gas pedal.
And the CFO was super clear about why. This isn't some wild bet on the future. They're spending this money because they have to. The demand from customers is just that overwhelming. She even said they're in a tight demand/supply environment, which is basically business speak for, we literally cannot build this stuff fast enough.
Now, of course, spending this much money this fast comes with its own challenges. The CFO flagged a few headwinds to keep an eye on. Getting all the parts they need is going to stay tough. And all this new equipment, it loses value over time. That's depreciation. And that's going to start eating into their margins. Plus, they're going to have to spend more on sales and marketing in Q4.
So that's where we're left. It really all boils down to this one big question, doesn't it? Alphabet is going all in on AI and the cloud, backing it up with absolutely record amounts of spending. And right now, it's paying off in a huge way. But the question is, with that spending set to go even higher, can they keep this incredible, record-breaking growth engine running? That is the billion-dollar question, or I guess in this case, the $90 billion question.